Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the man, myth, the legend, Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good to see you.
I stumbled there for a second. I need some more coffee, but
Who am I
uh,
talking to?
yeah, my brain cramp. But what I wanted to talk to you about, because again, you're in my second book, 15 Conversations with Real Estate Millionaires, talking about a truck and a toolbox. And really, your story is kind of the American dream, right? Bootstrapped it, just did it, worked hard, built great success over time. I was hoping you could take a minute to kind of point folks in the into the future where opportunity might be most easily had. Because again, I think in recessions and bear markets, there's tons of opportunity, but a lot of people don't see it because they're afraid or fearful. So let's tell people about some of the opportunities that will be ahead of them.
Yeah. So, I mean, opportunity is everywhere you look for it. The problem is most people don't look for opportunities. They think opportunities, only come around once in a lifetime, or they don't have the skills to even identify an opportunity when it comes along. So, the first biggest opportunity is in yourself. You need to have the knowledge, skills, and abilities to take advantage of the opportunities that come along. So, where are the biggest opportunities going to be? Obviously, for people that, understand and are in that world, the markets. So, markets are going to have huge opportunities. Once the dust settles, we reach the bottom. That's where the big moves are made. That's where I entered in 2009 at the bottom of the markets. Again back in 2020, during the pandemic. So when these markets take these big deep dives, that's where your big opportunities are. In traditional markets, crypto, there's going to be big opportunities there once things reset and the dust settles there with Bitcoin, Ethereum, some of the major altcoins and crypto coins. So, the question is, how exponential will they be? Because we're seeing diminishing returns in those. So, and some stocks outpaced Bitcoin and crypto from 2020 bottom up. So there's opportunities in both of those. And, crypto isn't where it was, 2 years, 3 years, 4 years ago, when you could get stuff for fractions of a penny that shot up to $20 and, made a bunch of people a ton of money. And, so you got to be careful what you're messing with there. Real estate, obviously, with mortgage rates going where they're going, real estate market, if the rates stay high enough, long enough, and don't come backwards, real estate is going to correct. It's just going to take time. The real estate market is slow. The commercial market's going to reset quicker, and it already is, than the residential market, because that's different. That's a business. That's a whole different lending vehicle environment and investor on those assets. So you'll see bigger deals and discounts and corrections there than you will in residential. And then when it comes to businesses, there's going to be a lot of businesses that are under duress, that are having to cut back, having to pare down. And then there's going to be owners that are wanting to retire and nobody coming up behind them in different sectors, service-oriented business, trades businesses, things like that, where there'll be opportunities to take some of those over without any money. We went over that last week, and how to do that. And, maybe roll some of those up and, build a nice little conglomerate that you can eventually sell when the cycle repeats itself and liquidity comes back into the markets, and interest rates are low and you can borrow money to pay exorbitant multiples on businesses. So now's the time to be building, collecting assets, looking for opportunities. And again, opportunities are going to be where you're looking for them. So they are everywhere.
Yeah, I love that. I love how you see the world. One of the things I did want to ask you, because I think there's a lot of opportunity coming in businesses, and again, it's an area I have zero experience. So uh, when I look at the next year, just kind of mirroring our conversations, would it be fair to say that given what you see coming, it's probably best to buy a business than maybe start one, given the ability to do creative financing to buy a business today?
Yeah, generally. So if it's a good business with, employees and systems and customer base and things like that, and you see that it has, for your goals, a future, whether that's exponential growth or whether it's just a solid income that you can have a absentee ownership of and get passive income off of by owning. So it just depends on what your goals are and then what industry you're in specifically. But generally, in most cases, it is easier to buy a business and then add value, or just, it's a passive investment if you've got, somebody operating that for you, than it is to start them from scratch, because then you got to build everything, you got to invest to get it to a certain level and all that. So you just got to be in the right sectors in terms of, growth and things like that, and sustainability. You want pandemic proof businesses, as we saw, back in 2020. You want stuff that's going to thrive no matter what. There's a lot of opportunity in the service industry, different types of services, online and off. in technical trades as well as intellectual trades, knowledge businesses, knowledge and, skills oriented type services. And then there's your traditional brick and mortar businesses that aren't going anywhere. When you look at, alternative energy, solar, medical, food, those types of things, transportation, shelter. I mean, those are the businesses that people have to have, the core services that no matter what the economy is doing, people need to eat. They got to have shelter. They got to clothe themselves. They got to educate themselves. You got to have healthcare, those types of things. So, there will be big opportunities, and there already are, because, we've got a little bit of a turning over of the population, right now.
Yeah. I think one of the things that when I look at kind of the business area, it definitely is a buy a business, assuming you can get the right structure. Because again, I think the systems and process, the customer base, you can basically get on terms versus all net new capital, right? One of the things I think is important today is having that cash, right? Cash is not trash. So again, don't kind of burn it all, kind of starting momentum. If you can buy a business that already has momentum and then accelerate it, I think that's a lot easier, right? Most of the fuel on a rocket is used just to get it off the launch pad. So again, if you could buy a business that's already in the air, it's generally easier. And then again, I think you're so right about commercial versus residential. Many of my experts, Anna, Jonathan, and others, are talking about the pain in the commercial market because of debt, bridge debt, short-term debt, new operators, unrealistic assumptions. There are going to be some significant write-downs coming to the commercial debt market. Would you agree with that?
Yeah, absolutely. And those are real write downs. Like I said, in the residential sector, it's, those are distorted levels. In the commercial sector, it's going to be real write downs because it's all cap rate. It's all based
Yeah,
on
it's all right.
the cost of the capital, and, investors looking for yield. If you're buying an apartment building or a commercial property and you're trying to get a 4.5 cap, I mean, you can buy bonds now and get the same rate of return. You can't leverage that like you can real
Exactly.
estate, but from a cash on cash standpoint, that's what the big money's looking at. So that's why lending is getting more expensive and more punitive. Might see credit controls, start to happen, but yeah, it's going to be an interesting time for the commercial market with rates where they are. And there are a lot of short-term interest-only bridge debt that was originated over the last 2 to 3 years, even 4 years in a lot of these big, multifamily deals, even our buddy Grant Cardone, every deal he
Yeah.
does is interest only bridge debt. Now he says, I'm not sure, some of his loans are 10 years, some are 5 years, but he's been doing deals for the last few years. So, he's going to face some issues, with refinancing a lot of these properties.
Yeah. And then the other thing is the stock market, right? You're a business guy. Really, you're everything. I'm definitely a real estate oriented individual, but something I know that I've actually moved some capital over to my Schwab account. So I can buy some stocks at a discount. There will be some great businesses that go on sale in a crash, and you really can build positions if that's your area of interest. But again, you got to do the work. You got to invest in yourself. This is not a time to gamble. It's a time to really look for opportunity. And I think opportunity, like you say, will be everywhere. But where are you focused? Don't be all over the map, right?
Well, and understand what a discount really is too. So yeah, there are stocks at a discount. You hear that on CNBC, you see it everywhere, but what does that really mean? What does a discount really represent? So you need to understand how to value that investment before you just jump into it blindly. And who's the biggest value investor, most successful value investor of all time, right? Warren Buffett. And
Yeah.
if you look at his fundamentals of how you value a stock or a company, that's a pretty good baseline and guideline. But for me, given that as well as other things, I go back to where were we before the pandemic? We were on a big, QE, artificially inflated valuations before the pandemic ever hit. Then it skyrocketed. So when you think about what's a fair valuation, you look at some stocks like Facebook. Facebook's now back to its 2015, 2016 level. Is
Down
that
again
cheap?
today. Yep.
Is that a value? I mean, that was QE and a very low interest rate environment when the stock hit that level. So, a tech driven company, but they have earnings. I mean, it's a big company. They have earnings, they have cash. What's the valuation right now? Is it a 14? Is it a 12? I don't know what it is right now today, but
I think I just saw it. It was at 94. Last earnings were like $1.50. So, $6 a share. Again, just annualizing last. So what would that be? Like a 12 maybe? to
Yeah.
15,
So,
something like that.
and you look at what typically trades at 12 to 15, those types of things. So,
Yeah.
maybe 18, but for a company like Facebook going through what it's going through. So, might be a
Bur-
good value right now. I don't know.
Burning 5 billion in cash on the metaverse, or 7 or whatever it is. Yeah.
Yeah,
Pretty
yeah,
crazy.
yeah. So, which isn't a bad idea. Where he messed up was he showed what he actually had for that
Yeah.
investment, which is not good. He should have
Yeah,
just
it's
kept it kind of
early.
quiet,
Yeah.
not showed that stupid little, his character and what he thinks the metaverse is, because that's not what the metaverse really is. It's not representative where the value in that space is. There's huge potential in the metaverse, but not a bunch of cartoon character avatars sitting around a table interacting. That's not where the value of that
That's
infrastructure is going to come from that they're investing in. So he doesn't know how to articulate, or maybe even I'm not going to say he doesn't understand where it's headed, but he just doesn't know how to show it and articulate it right now.
Yeah. I think it's fair to say the market, the public don't get it yet. Right.
Yeah.
And I do think it's a huge opportunity. Is he 2, 5, 10, 15, 20 years early? I have no idea. It's not my thing, but yeah, it's fair to say the market doesn't understand. I think that's reasonable. But again, folks, the point of this conversation is, in a recession, in bear markets, opportunity is everywhere. You just have to look, you have to focus. And Greg Dickerson is a living example of just how to do that. So where can people find you?
Yeah. GregDickerson.com. And remember, opportunities everywhere. You just got to go create it.
Love that. Thank you, buddy.